Hey everyone, this is Paul Robinson from fxsimplified.com. It's May 18th, 2014. I'm going to go over a highlighted trade from last week, go from the setup to the execution of the trade. Before we get started though, let's take a look at the risk disclosure, just something I got to do. So if you want to hit pause, take a read real quick, get that out of the way. Alright, great. Got that out of the way. Perfect. So moving on, this is the setup. This is the setup I'm currently in. The entry prices. We're going to go ahead and first, the first setup the setup I'm in now, the trade I'm in now, right? If you guys have been following me, there was another trade before that earlier last week, in which was unsuccessful. Part of trading, right? So right here, I had taken an entry. And that entry was at 171.75. And I had put my stop up here around 172.50, which turned out to be not a very good place to get stopped out. So we had, I took the entry here, 171.75. Was up a little bit on the trade, came down to support, rallied back up into these two intersecting trend lines. Now, why would I take a stop there? To be perfectly honest with you, wasn't the best place to put a stop. I originally, when I put the trade on, was thinking middle of this range here. However, as things played out, time carried on, it became a spot where there was just some intersection in trend lines, and that's definitely not a place where you want to be covering into. However, I stuck to my original stop, and once we had gotten up to this point, took my stop, said, okay, you know what, we're at an inflection point here. We've got a trend line, already starting to think bearish in general, especially considering, our daily setup was looking like this. We broke this trend line that goes all the way back to August. You get this giant triangle breaking out of that. So, to have some price fluctuation around this inflection point or this apex is not to be unexpected. But again, I was trying to stick with the spirit of not moving my stops and monkeying around with that stuff. So I took the stop and decided, you know what, I'm taking the stop, but I'm going to be really quick to pull the trigger once it starts to move back lower again. And then that's what I did. So took my 75 pips stop loss on a 50% size position, which in effect is really like a 37.5 pip loss on a full size position, which is how I even put it in the performance page, and that's how I look at everything based on 100% size position, because I believe that you've got to look at the entire picture, not just the number of pips, but how much are you making per pip. And that's something we'll go into another day. But nevertheless, if I had a full size position on, then yes, 75 pips on normal leverage, that's what you lost. But it was a 50% position, lost 75 pips, therefore it's 37.5 on, and the whole idea is that you want to make the most amount of pips on your biggest positions and your half positions and whatnot. You lose less, and it increases your risk reward profile. It allows you more flexibility to be wrong. So in this case here, I lost 75 or 37.5 on a 50% position, but then it came down to this trend line and this intersection with this uptrend line, and again we've already in big picture broken down. So it wouldn't be very prudent of me to not look at another setup in here. So that's what I did. I waited for the momentum to turn back lower. Took another entry. So the second entry is at 172.48, and put the stop loss then above these pivots. So there's those little resistance right here. You can see, boom, 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 and then this peak over here. So if we got up here, yeah, sure, we get back up here a double top zone, but at that point maybe we'll be making a run at the highs. So I thought at the very least let's just put it above any pivots outside of the high. And if it should get above both of these by any real margin, this downtrend line, this uptrend line, then probably we can reevaluate. And as I always say, and have to remind myself even at times, like in this situation, you can always get back in, but you can never get the money back from a trade that you didn't get out, right? So if you saved yourself 100 pips and then got back in, say, you get out and then it falls 25 pips and you get back in, that's fine. But if it were to go another 100, you can't get those back, right? So, but you can always get your position back. So that's the thinking here. So got back in here, put the stop 173.10. It's 60 pips up higher. Not a whole lot of risk. Breakdown, broke below here. And on top of this, if you look at this, you've got what I call a mountainous, or it's a head and shoulders, if you will, but it's a mountainous pattern. You've got this very large swinging, just kind of forming a rounded mountain-like pattern, and that's, again, looking at the big picture, that's all happening over here in this apex of this very large triangle. So for that to happen over here during all this, for me to jockey around and get a position without it actually making a clean break, I'm okay with that, because you could get, like I just said, you've got looking back here, this position put 60 pips of risk. Well, getting back to the daily, from 174 down to 164, you're looking at, from the break of this apex, I'd say 171, 172. You're looking at 1,000 pips to the downside, possibly, right? So 162, 161, and my initial risk is 70 points. I mean, you do the math. That's crazy. That's a 15 to 1er right there. It's more than that. It's like 17, 18 to 1. So, I mean, those are odds that you take any day. Again, getting back over here, we broke down. We're below this level here. A couple different things could happen here. We could form just a parallel channel here. And again, keeping in mind, I still have just a 50% position. I'd like to have a bigger position on, but I haven't quite got the second entry trade that I've been looking for. So, with that said, I'll be looking for that in the next few days. And if I start entering other JPY pairs, because of the correlation so high, I'm not going to necessarily pile into the sterling yen position. I'll be adding in maybe Aussie yen, which is something that I highlighted earlier in the newsletter. Dollar yen, so these are other things that I may be getting into if they have a little bit better looks. But with this, looking at this trade, and if we were just isolating this trade, we've got right now what could be a possible sideways channel. We could get a triangle. If we get a higher low over here, we could get an ascending wedge, and these would be formations that you could add to the trade and get 100% position. And then the first target I'm looking for is this 169.50 area. Maybe peel some of the additional add-on off there. Also then look at 168, but ultimately, we're looking at 164 and below, 161, 162. So we're looking for something much lower down here. If we go and look, this week is interesting in sterling land, because we've got some big news coming out. Some big plays. I'm not a fundamental guy, as you guys know that already. I'm not a fundamental guy. However, I am well aware that many of the technical setups that I have are, the gains and the losses and the stops and the targets are all hit because of these things. So I'm cognizant of it. So on Tuesday we've got CPI coming out of the UK, big number. Then we've got Kuroda. It's going to affect the whole yenplex. And then we move on into Wednesday. We've got the BOE with their minutes, and then also we've got the Fed coming up here, which not so much sterling specific, but nevertheless it's going to be big. And then we've got here coming on Thursday, we've got UK GDP. So there's a lot of data coming out. In fact, the majority of the data this week that's of high impact. This is, by the way, this is looking at the daily FX calendar, which I like to take a glance at and see what's going on. And they do a pretty good job by using the high, low, and medium of telling you really what's going to have an impact on the week's trade based on these news events. So, you know, looking at this, we definitely gonna get some movement out of sterling. And you know, my belief is in that department is that you know, if you're on the right side of the trade period, the news is going to come out in your favor. If it's not, it's FX, it's currencies. So you know, you have stop losses in. Market's not going to gap overnight like a stock, and then you're just caught. Sure, it may go through your stop, and then you don't get executed for 10, 20, 30 pips later. But you're not going to get blown out of the water, you know. And so, I just trade right through news based on that philosophy that either you're right or you're wrong in general. So, either it's going to work out for you many times. Many times the trade will end up, because I'm in the path of least resistance, right? The news will come out in that direction. And when it doesn't, it gets stopped out and we move on. That's it, you know? So if you can't really, to me, you can't really just sit here and try to jockey around every single number. But anyways, that's it. That's the sterling yen trade, still in progress. I hope some of you have been joining me on this trade and making some money, and I look forward to, you know, this trade maybe working out a little bit more this week. So thanks for joining me, and I'll talk to you guys next time. Have a good week. Bye.